Now, use whatever numbers you want to use. I just use this as a thought experiment to provoke thought around this and thinking about Bitcoin differently, is that we've thought about this historically in a linear fashion, in that people think that, oh, okay, well, there's $2,000 trillion of value in the world. If Bitcoin, harnesses all of it, then Bitcoin can be $100 million a coin. There's 2.1 quadrillion divided by those numbers, and by the formula, you divide total global trade by the number of Bitcoins minted, you get to a $7 billion valuation. And this is where the $7 billion valuation probably gets dwarfed and becomes meaningless when you think about, my hope is to move the over the window from millions to billions is an acceptable valuation of Bitcoin.
To be blunt, I'm a little nervous to talk to you because when I talk to fellow smart people that are in this space, sometimes they scare me in a good way. Greg Foss is one of those people. When I talked with Greg Foss, and he explained to me in very eloquent and very logical fashion how Bitcoin could and should be $1 million to $2 billion a coin just from CDS markets, and more of his forte. And it's exciting, and of course we all want to hear it, but it's a little terrifying. And you, in a very similar way, although to a much larger degree, are kind of the same way, in which you have very bold claims, and I almost don't want to believe them because they seem so absurd, and yet they're almost terrifying because I can't find a way at which they're incorrect. So I'm really looking forward to discussing your ideas, hearing why you are as optimistic and bullish as you are, and try to explore that idea as much as possible, because I think your ideas are even farther out there than what most people are perceiving with Bitcoin. And I think that's useful for folks to understand. So anyway, thanks for joining me. I really appreciate it. So.
I can't tell you what a pleasure it is to be here with you, Luke. You are a great advocate in this space, one of the brilliant minds, and an absolute honor and a pleasure to be here. So thank you for having me.
Yeah, thank you. Well, let's get right to it. I want to hear a little bit more about your background, because most people, you don't have a huge following on Twitter, which I don't understand, but I want to hear more about your background, specifically with working with high net worth individuals as well as accounting.
Sure. Well, I have run a multifamily office for the last decade. Prior to that, I was in finance. I've been in and around finance for the last 20, 25 years. Prior to that, I grew up in a household which my father was an entrepreneur and a fabulous businessman. So from a very young age, we got to talk business, and that was one of the ways that we connected. And he is just an incredible human being in all respects. And so I consider myself very fortunate that I've had such wonderful influences in my life. My father was an amazing figure, still is. My mother is an incredible woman. And then, my brother, who is quite remarkable in his own right. So I've had all these wonderful influences. And, from a day-to-day, and what I've done for the last decade is basically run a multi-family office where we look after some very high net worth individual families who require help in helping them determine what are suitable investments for their family to, de-risk their investment portfolio and hopefully outperform the market with respect to the investments that they currently hold. So a lot of wealth in Australia is tied up in property, typically, and that's probably like most of the Western world. Typically, that's been the most, or the easiest way. Maybe not the easiest way, that's not the right way to put it, but that's been the most popular way to generate intergenerational wealth. So a lot of our clients have large property holdings, and they come to us in a way to diversify away some of that risk into alternative assets. So we give a range of advice on a whole different range of asset classes, ranging from property, shares, bonds, although I don't like bonds, and we can get into that for a number of reasons, but this audience probably shares that feeling. We do have bond proxies in our portfolio. However, the last couple of years has been very, very difficult to find good investments, and investments that we think are going to outperform in the long term. And this is where one of the asset classes that we advise on is alternative assets. And from a personal point of view, there's no better alternative asset than Bitcoin. Although I might think it's a mainstream asset, clients definitely don't feel that way. So that's a little bit about background about myself and what we do.
Yeah, that's fascinating. It's hilarious to me. You already brought up bonds.
Yeah.
My next question was going to be about more traditional assets, what your thoughts were on them, but like me, you dislike bonds so much you already brought it up. So I guess I'll ask my question anyway. Before we get to Bitcoin and the new asset on the block, the new kid on the block, a lot's changed in the last few years, and I want to hear your opinion. I know there are many things you probably can't say or shouldn't say on a recording, but when it comes to looking at the major asset classes, and I know you're in Australia, so it's very different here in the U.S., although perhaps it isn't. When it comes to stocks, gold, fine art, bonds, cash, and fiat currencies, the major asset classes in the world, where would you say outside of Bitcoin? How would you explain what's going on in the world to people? Because everyone can feel that something is going on, but they can't articulate it. And I think a lot of times it's just because they don't have the background that people like you or myself or many other people in the Bitcoin space have. So how would you articulate that to someone? What is actually going on here with all these other assets?
I think if we take a helicopter view of this and look, I guess, beyond assets, it's probably important to have a look at what's happening from a society perspective as well. It feels like there is a breakdown of trust across our institutions. And if I look at what's happened in the last 3 or 4 years, let me just go through sort of maybe in a reverse chronological. We've got a breakdown of trust with the Federal Reserve. They outlined that this inflation was going to be transitory, and it seems to be anything but. A little bit of a disclaimer there. I think that we're probably in for a big drop in inflation in the next couple of months /6 months to 12 months, but that might be a temporary thing. And then you look at some of the conflicting medical advice that came out around COVID, that basically undermined the faith in our institutional healthcare system and the hospital, doctors, the whole program that delivers our healthcare to us. And this isn't just a US or an Australian thing. This is, I think, across the entire globe. You look at our judicial system. You look at the amount of I guess turmoil that we're seeing across all of our institutional bodies, and what it fundamentally comes down to, I think, is a degradation of trust in institutions that have served us for the last 100 or 200 years. And this is something that is upstream of what's actually happening to our assets. So we can feel it from here, and it's sort of seeping down into, effectively, it's carte blanche for everyone and anyone to do what they want, because it feels like there's, and this is probably quite pessimistic, and I'm not a pessimistic person, but it feels like there is a sort of a breakdown in the rules and regulations that have typically guided our society and delivered the wealth that we're aware of. Our foundation was, across Western democracies, was built on a fair and equitable system that everyone was fundamentally treated the same. And it feels like we're starting to see the start of a breakdown of that fair and equitable system. And I think that is then having consequences for the assets that we're looking to invest in that, you have property. I think about property for the first time in 40 years, you now have the other side of the trade. So in the 1980s, we had really high interest rates and we had really low asset prices. So for the last 40 to 45 years, give or take, you had effectively, you were sailing with the wind. You had all of these, wonderful things conspiring to deliver great increases in asset values while the cost of money was coming down. So it was fundamentally a huge push up in property. That same paradigm that shot the property market to really high values that we've seen was the same for shares, and it was also the same for the bond market. So as the bond market came down and down and down, the interest rates came down and down, the value of the bonds went up and up and up. And now what we're seeing is, with inflation come in, we're effectively the nexus of a 40 to 45 year change. It's a complete paradigm shift that, for most living people who are in the markets trying to give advice in this case, we're a complete game change. This is a whole new paradigm shift in that all of a sudden we're not in Kansas anymore. We're now having to play and abide by rules that no one's played by before, and there's maybe the exception of a few older guys who, I think the Stanley Druckenmillers, the Paul Tudor Jones, who are, basically mid-60s, maybe older, who have lived in an environment where they've seen the tough times in the 70s, and they're probably the ones who are adjusting the fastest. And I think about those say, three people in particular who have, of the elder set, who have picked up technology the fastest, and I think are probably best positioned to do that. I think Paul Tudor Jones, back in 2020, April, maybe 3 years ago, he wrote his Fastest Horse newsletter talking about Bitcoin being the fastest horse in an inflation race. You've got Stanley Druckenmiller, who's very pro-Bitcoin, and then you've got Bill Miller, who supposedly has 50% of his assets in Amazon and 50% in Bitcoin, and this is one of the greatest value investors of all time. I'm like, if we have that conversation with clients or even with people who, are in the normal world, that sounds completely absurd. But no one would think that their investing acumen is absurd. In fact, anyone would be thrilled to have their track record of investing for the last 40 plus years. So it's a breakdown across all assets. And in respect to the degradation of trust, I think the other thing that's happened, which has been the paradigm shift, is that this kicking the can down the road has happened multiple times, and I look at it in the fact that what has made this particular time so difficult for investing is that you have got, for the first time in history, there is no real diversification. We have got all assets now moving in tandem, which is terrifying because there is literally nowhere to hide. You can't, other than cash and I think Bitcoin, you can't hide in bonds when the property market's coming off or shares are coming off, because they're all moving in unison. And I've got a theory on this, is that what we're seeing for the first time in history is a saturation of debt across all three asset classes. So what you have is you've got a saturation of debt in the property market. Basically, there's no ability to borrow anymore in that market. We've tapped out, so it's going to be very difficult with interest rates where they are to having any accretion of value in that property market, because it's a function of yield, and basically we've now got a hurdle rate of 5, 6, 7% to beat that is very difficult to have. So that basically is going to mean that property prices fundamentally have to come down in some way, shape or form. Then you move to stocks. You've had share buybacks for the last 20 or 30 years. The most egregious example of really bad share buybacks, to my mind, is probably IBM, which has bought back over $120 billion worth of shares, and their market cap is less than $120 billion worth. I mean, this is crazy. Like, that is just so insane to think about. And this is the market that we are working in.
I didn't know that. That's quite ridiculous. Yeah.
Yeah. And so fundamentally, the share buybacks may as well be effectively a form of debt, because they could have distributed that to the investors, and they could have invested that in productive assets, but they didn't. They just basically bought more shares, which was really fantastic for management, but basically a big problem if you're an investor in IBM. The other thing is that the corporate debt market is probably up to its eyeballs in debt. Prior to these interest rates rising, there was speculation that 20% of the S&P 500 was effectively zombie companies, basically only existing to meet their interest payments. And now the interest payments have moved from say 2 or 3%, maybe 4% to 7 or 8%. I'm like, what does that do to 20% of the S&P 500? They're effectively, I don't know if there's, maybe that which is dead can never die again, but it doesn't bode well for what's coming down the pipe. And I look at this and I'm like, oh gosh, well, from an investing perspective with the share market, we've really tried to limit our exposure to any companies that have got, fairly big debt levels, because I think the corporate bond market is basically set to explode. That fundamentally has to be underwritten. I think the top 5 corporate bond issuers are names that I won't go into, because I'll probably get sued if I tell you my real opinion of them, because there'll probably be a run on them. And this is where I look at, from a stock market perspective, we want to be investing in companies that don't have, high debt levels. We want very low debt levels. And I can go into a theory on stocks, but we're not here for that. But then the other thing is the bond market. Basically, although bonds are effectively debt, we have reached peak saturation of debt levels in the bond market, because we now have the 2 largest buyers of, bonds in the world, being China and Japan, of the US bonds, effectively tapping out, saying, no more, we can't buy any more of this. Yeah. And so what you now have is, now we've reached saturation levels in the bond market too. So property, peak saturation debt levels. Stock market, peak saturation debt levels. Bond market, peak saturation debt levels. There's nowhere for this thing to go. And this is why when everything's capped out on a debt perspective, everything now rises and falls at the whim of, the Federal Reserve and what Jay Powell's going to do and decree with the interest rate. So it now becomes every single asset becomes correlated. So there's nowhere to hide. This is the really difficult thing about investing in this period, and this is the paradigm shift from the last 40 years of what we've seen.
There are so many things in there that could be an hour-long podcast on their own. There's so much in there that I think is incredibly timely and incredibly important for people that I think is wildly misunderstood. I'd like to add a couple things on that leading into my next question, but the funny thing is that we've already said that you're an optimist. And yet you're laying out this very dark, pessimistic picture, and that's one of the things I find funny when I speak to people that are either debating with me or we're just sharing ideas of disagreement. Is that I emphasize I am an optimist, and as an optimist, I have exhausted every possible positive, beautiful unicorn rainbows scenario of these asset classes, and I just can't find it. And perhaps it's there, and I'm missing it. But when I talk to people like you, and I've spent multiple hours talking to you on Zoom and over phone, and I could tell you're an optimist. And hearing a fellow optimist being that pessimistic, I know we've both gone through all the options, and I can't find anything. It's just it sounds like you can't find anything either. And I think what you're saying, it comes down to trust, is the perfect simplification. You're in Australia, and so correct me if I'm wrong, but I think Australia is where the toilet paper panic began back in 2020. I mean, it's what more of yes, how many red flags does society want? Yeah. A lack of toilet paper, that should be the epitome of a lack of trust. And then not even lack of trust, but a lack of rational thought, because I think it was toilet paper that ran out the fastest, so not the things you would actually want for a respiratory disease and all those medicines and everything like that. So it just goes to show how short-term minded we are anymore, how low trust we have. And that was 3 years ago now. I can only imagine what it would be today, what's going to be the next shortage. And, and again, I'm an optimist. I don't know what that's going to be, but it just seems to me that trust is doing nothing but flowing in that one direction. And that's one of the things that Jeff Booth talks about, and to kind of put a little twist on his thoughts there. But I wonder, when it comes to trust, when trust begins to deteriorate, I don't know a way at which that can be gained back, at least easily, because what happens when trust falls? You say, oh, it's okay, you can trust us, we'll do this, and then it's how can you gain? You can't regain trust within a paradigm that's already had violated trust. And that's kind of where the whole Bitcoin thing comes in, that it's something separate, something on parallel lines that, at least I think, trust can be rebuilt from the bottom up upon. But perhaps I'm jumping forward a little too far there. But that's really interesting to hear your thoughts about how they're all correlated, because, as I put to others too, the whole world right now is just one trade. It's all a trade based on liquidity of the world's major central banks. And I think the last 3 to 6 months have been very telling, in that despite inflation being at exorbitant highs, the Bank of England, the Bank of Japan, the European Central Bank, and the Fed now, with the recent minor bank runs in March 2023, it's even though they have every excuse and every model and every reasoning, and all their jargon for the last 18 months has been saying tighten, 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 they've all just reverted back to easing as soon as there's a minor blip on the radar, because they have to. So anyway, I suppose I'm just agreeing with you more than anything, but that's really fascinating to hear your take on it, that it comes down to trust and that it's all that one trade. I'd like to take a brief moment and talk about the Bitcoin social layer, because today's sponsor of this podcast is the Orange Pill app. And the Orange Pill app is advancing and building that Bitcoin social layer as I speak here. In fact, I'm on the Orange Pill app. I joined it a couple months ago, and there are other Bitcoiners and plebs on there too. People like Safety and a Moose, Natalie Brunell, Nate Savenholm, Daniel Prince, BTC Sessions, and other Bitcoiners and plebs are on there too and joining all the time. And so the social layer is really important, because while online connections are essential and they're needed and a critical piece of bringing Bitcoin mass adoption, in real life connections are only going to become more and more important into the future, and a larger catalyst for being Bitcoin's circular economy and for Bitcoin's adoption. And so with the Orange Pill app, you can find Bitcoiners near you so that you can make those in-person Bitcoin connections and those Bitcoin friends. And one of the cool features is that you don't just find people near you, but also you can find Bitcoiners when you travel somewhere. So like recently, for example, I went to Boston and now I'm going to Miami here soon. And I'm glad to say that I've met Bitcoiners through the Orange Pill app directly and also indirectly through people I met through the Orange Pill app. So it's been something that's been useful to me personally. And so if you're going to be on the road too, you might be able to find Bitcoiners from where you're headed even before you get there. So, and additionally, Orange Pill app not only gives you people to meet, but it's also the world's largest repository for Bitcoin only events. So you might be able to find cool places to hang out and not just Bitcoiners alone. So we all know that social networks and network effects have value. And so everyone that is joining the Orange Pill app makes it only stronger and stronger into the future. So I would consider joining the Orange Pill app today and get one step closer to mass adoption and expanding your Bitcoin network. So Orange Pill app is available on Android, iOS. For your consideration, appreciate your time. Let's get back to the show. So of those three major asset classes that are all at saturation, for people listening, because most people listening probably have a certain allocation of stocks, some to bonds, and then the primary residence. That's typically what retirees have. Or not even retirees, but just anyone that's saving for their future, for their children, for their retirement. Of those three asset classes, how would you rank them? If you had to just throw a dart at the wall, on average, which asset class has the most possible downside of those three? Like which just causes you to cringe when you think about it? Is it bonds? I'm guessing it's bonds based on your reaction earlier, and because it's all debt, but I'm curious to hear your thoughts on that.
It's definitely bonds, and this is because there's, I think, misunderstanding of bonds, particularly, most of our clients aren't investing directly in bonds. It's the asset class bonds, so they're typically investing in funds. And so what I think is a big misunderstanding about investing in that asset class is that there is a very real potential for loss of capital. And most people think of bonds as being the most secure asset. And, Greg Foss does a wonderful job of explaining that basically the first person to get paid in effectively a liquidation event are the bondholders. But we've seen in the last, say, 2 or 3 weeks, Credit Suisse bondholders who had sort of a special bond. Credit Suisse basically got consumed or bought out by UBS, and those bondholders literally ripped up $10 billion of the bond issuance was. So all of a sudden, this bond market, they're getting zero on the dollar for that bond. Now, they should get something. The equity holders, ironically, got more than those bondholders. And this is where go figure, right? This is how crazy and upside down this world is. Those bondholders are meant to be paid out first, but were paid out last and got nothing. Now, I'm not saying that every bond is like that, but this is back to the degradation of trust across all of our institutions. There was a fine print, on the back page of, a 50-page document of, 8 font that said, oh, by the way, if this happens, then you get nothing. And it's like, well, no one's doing that due diligence on a bond. And, excluding that sort of prime example of, just it's not what you think it is with bonds. The other misconception with bonds is that you actually lose money on yours. Like you can lose real capital. And let me just give you an example. A client actually sent me this back in December last year, or actually September last year. That there was if you had bought in September 2021 a 40-year gilt, which is the UK's 40-year bond, government bond, for £100, you could sell that 10 months later for £20. So you lost 75% of your capital if you sold that bond then. Or you can hold that bond for the next 39 years and 2 months to get your £100 back, but you're going to have a 0.25% interest rate when the other bonds that are 40 years or 30 years or whatever are paying 4.5%. This is the problem that most people don't really comprehend, that bonds are really, really risky. And particularly what we've seen in the last 18 months or 12 months with the rising interest rates, they've been an absolute wrecking ball. And I haven't even got to, the damage and the carnage that has been instilled on the bank's balance sheets by holding these risk-free assets and not having to mark to market these long-term bonds against your obligations to pay out. And this is
It's the
where,
exact same thing with Silicon Valley Bank and all these other banks. They're not being marked to market anymore, and it's just all these losses that aren't realized, just floating out there. It's like 2008 on steroids. It's completely mind-boggling to me. So
yeah,
anyway, sorry I interrupted
and
you, but
no, well, that's the problem. And this is all caused by bonds and their devaluation or their depreciation in value, however you want to term that. And that, these bonds, excuse me, these bonds were on on their books at, 100 cents in the dollar. Yet if they wanted to sell them tomorrow, they could only get 80 cents in the dollar. Now, what planet are they living on that they think, oh, that's a good idea? And this is why the Fed stepped in and said, hey, we've got to backstop this, and we're going to just hold these for the next however long until these bonds come good and the par value, because they've dropped 20% in value today, but as interest rates drop down and down and down, the value of those bonds will climb up and up and up as they get closer and closer to the expiration of the bonds. So, it's not without cost though. So the Federal Reserve has basically made good on those and given them bonds that, are good, made them whole, but they've still got to pay the interest on the difference. So the banks are going to bleed out. And now this is the first problem, I think, in the banking sector that is the first of many to come down the pipe. And we've seen the problem with the commercial real estate sector that is probably the next shoe to drop. And what does that look like? Well, take your pick as far as the number of, the dollar amount of loans out there at the moment, but it's in excess of probably 160 to 200 billion dollars. And if you look at the rental vacancies across commercial properties in the US, and we're very US centric here. We basically, you guys sneeze, we catch a cold. So we've got a huge focus. It's, 90%, 99% of our
you guys have a run in
is-
toilet paper, and then we begin. Yeah.
Yeah. You just thought about it and we had a run in toilet paper. So yeah, that's how it works.
Yeah.
And this is where, we've got more problems coming down the pipe for the banking sector with commercial real estate. Now, commercial real estate's a problem. So what's going to happen with that? There's a potential, are these loans going to be non-performing? And what's going to happen there with, the way the banking system's set up in the US? You've got a lot of non-recourse loans, which means basically people hand back, the keys. And it's like, well, come and get it. It's yours now. And they walk away, basically. And that's one of the things that makes America so fantastic is that, there are really great provisions for protecting you from bankruptcy because that's how the US system works. It's built on innovation, iteration, and the entrepreneurial spirit. And so if you had recourse loans, which we have in Australia, there's far more consequences for walking away from a non-performing asset. And this is where I wonder, well, what does the Federal Reserve do when, all of these non-performing commercial real estate projects or properties come to the bank? The bank basically assumes them because they're non-performing and they're 40% below value, and all of a sudden the equity that the client had in it's got nothing, and now the bank's got no equity in it, and they've got the loans that are non-performing on the back of it. Does the Federal Reserve then go buy the properties or lend the money to the banks to take that on? I don't know. I'm just surmising, but I'm looking down the pipe thinking, what's the logical conclusion?
What do they do?
Like, there are some problems coming, and this is where I'm like, ooh, I would not want to be in their position because there's no good outcome.
Yeah.
And this is where
yeah.
This is where I really struggle. I'm like, I'm trying to look at it from a positive frame. We talked about being positive, but there's just a lot of if-then scenarios that are really not playing out from a positive perspective. Whether it's the US, whether it's England, whether it's, ironically, I think, the US is probably best placed to deal with it than anyone else because of, those things I mentioned previously. I wouldn't want to be in Europe. We try to avoid investing in Europe for that reason that, if you think America's bad, well, just have a look at everywhere else and it's worse. So, you guys are just talking about it and at the point of all of the investing universe. So we get to see it. But I think the rest of the world is worse. And this is probably something when, Americans look at the situation internally and think, oh gosh, it's horrible. One of the, I think, unfair criticisms of, American citizens is that they're quite myopic in their worldview. And I completely understand because the entire finance investing world revolves around it, and it's, arguably the greatest country on earth. It's from a migration perspective, that's the country people want to move to. That's where people basically move their capital to because it's got the best provision of property rights. And so, it's easy to be that way and have that mindset. But if you, as an American, look around to see what else is happening in the world, like, oh,
Yeah.
geez, like grass is always greener on the other side, right? But, you know, bad here, but it's worse there.
I'm really glad you said that because a lot of my American peers that hear my views, they think that I'm, again, coming back to pessimism, they think that I'm one of these pessimists that say, oh, it's the end of America and the rise of foreign powers or this, that, and the other. And whether that's true or not, I think is irrelevant to the point. The point being that America is the strongest backbone, supposedly, of these systems or these series of systems. And yet, if we're in this much trouble, it's just to emphasize that these other areas of the world are in so much more trouble. And I think Americans sometimes are so clueless to how other financial markets work because, by comparison, other financial markets are so much smaller than America's financial market that it's hard to get that across to Americans, I think. That most people have trouble understanding our own financial systems, like forget the rest of the world and how the rest of the world works, and then forget how that interacts with ours. And so I'm glad you made that point that sharing problems on America's financial system is not saying that America's in the worst spot relative basis to the rest of the world. It's just saying that it's the least bad of the rest of the world, and it's very, very bleak, even from an optimistic standpoint. So I think we really hit I think we really hit the nail on the head of the problems coming down the line. And so when I look at history, and I see very similar things: demographics shifting, the economy shifting, to debt reaching saturation, all these things going on at the same time as we devalue our money, we break trust, which then breaks trust everywhere else. It's really very predictable. And every time in history, the wonderful thing, the thing about those pesky humans that always come back bigger and better than before, is that they find an innovation, or they find a way out, or there's a new empire that rises, or a new charismatic leader that takes a charge, or whatever. And my question this time, I think you'll fully agree with me, but my wondering is, what if the empire, or what if the group of people, or what if the nation that rises up in the ashes of this declining system is the Bitcoin system? And so I guess coming out of this more pessimistic view into the optimistic view, in what way do you think Bitcoin leads the charge of optimism in this world of increasing pessimism?
That is a really big question. There's a lot of ways we can go with this, and a lot of, I guess, avenues to discuss. Firstly, and to your video that you posted yesterday, I think Bitcoin is hope, and Bitcoiners, I believe, have an innate optimism in the world that Bitcoin can change humanity for the better and can have a significant impact on society. Um, Before I delve into that, I'll probably start with our most basic of needs, which is basically, or our most basic drivers, which is greed and fear. And I want to speak to that first because that's what gets everyone to Bitcoin, and that is fundamentally come to Bitcoin to get rich. And basically, it might not happen overnight, but it will happen, like that old Pantene ad. You just need to sit with it and go down that rabbit hole. And this is where, our basic of drivers is fear and greed. So if we channel that to all potential and wannabe Bitcoiners, that hey, there's an asset here that can get us out of a lot of the troubles that we're in, I think then it allows people to go down that rabbit hole and dig deeper into, well, I just came to get rich, but now you're telling me it's about freedom go up technology. It's not just number go up technology. And then there are all these amazing parallels to a whole change in system. But the other thing that Bitcoin does is that, you don't change Bitcoin, Bitcoin changes you. It gives you a way of thinking about things, different critical mindset of how to approach different problems. And this is where, for I believe the first time in history, there are two really key benefits that Bitcoin delivers outside of the number go up. And I'll just start with the very personal, because every change, or every movement, every change starts inside, not from the outside. And that is, I think fundamentally Bitcoin has the ability to deliver to all Bitcoiners a framework for scaling up Maslow's hierarchy of needs in the fastest way possible. And so just to quickly give a rundown of Maslow's needs hierarchy, it basically is a representation of what people need to feel basically fulfilled in life. And it starts with your basic needs that you need, basically food and shelter, sex. Then it moves up to, you need to have connection in your life and love. Then you need to have purpose in your life. And then fundamentally self-actualizing is you living your best life, doing what you want. And that's basically a pyramid that takes time to scale, and it requires a huge amount of work, energy, and effort to go up that scale. And this is where, as a Bitcoiner, what I see on a personal front is that with that Maslow's needs hierarchy, investing in Bitcoin, it basically lets all participants in Bitcoin start on that base layer, which is fundamentally driven by greed. Hey, I want to get rich, which is, hey, I want food and shelter and I don't want to have to worry about that anymore. And then I've got this funny little infographic I'll send you, which one of the guys made up for me from the 2-Bit Idiots podcast, which was very kind of them. But it's basically the Maslow's needs hierarchy, and overlaid that needs hierarchy is the halvings. So every layer that you go up is effectively your time invested in Bitcoin. So every 4 years you get to move up to the next layer of this Maslow's needs hierarchy. And fundamentally, I think it's a cute thought that is directionally correct. So investing in Bitcoin allows us to achieve our best self from a personal front. And so that's the personal side of things. I could probably talk all day about that, and a lot of synergies with a whole host of things. But from a societal perspective, what I think is a really important thing about Bitcoin is that I believe for the first time in history, this has the ability to align incentives for everyone on Earth. And this is a complete game changer. And when everyone's trying to self-actualize, and then you overlay the fact that for the first time in history, we have something that can incentivize and align 8 billion people's separate interests, all of a sudden magic is going to happen with this. And this is where, it's come to get rich, stay for the revolution. This is what really excites me from a long-term perspective, because I look at all of our institutions and organizations that have tried to organize people. From the smallest, it was basically oneself, and then it was a family, and then it was, an extended family, and then it was basically your tribe, and then it was your, state, then it was your nation. And what has happened over time is those, nation states have basically had, altering borders and things like that. And then we've also had different religions have effectively congregated people to align interests and effectively deliver a values system to people to either believe in or adhere to. And this is the first time in history that I think there is a system, albeit a financial or a networked computer system, that is going to help align all interests of humanity, which is really bizarre because there's nothing human about Bitcoin at all. It's all digital. So this is the dichotomy.
And that's a feature. That's a feature. Yeah.
Mm.
Yeah. To add something to that, I think I agree with that. And the way I would put it is that up to this point, all forms of money, because they've had human influence, it's just been a question of who's in control of it, who's in charge of the money. Because if you have person A that can create money and person B that can't create money, or perhaps they can create money but to a lesser degree, well then you have all these different factions, all these different groups that are fighting over who's in control of that. And so it's kind of like playing a game of Monopoly. If everyone's playing Monopoly, yeah, sure, we're all playing on the board and trying to go past go and get our $200 or whatever. But really, at the base of the game, it's all about who can become the banker. And so I think to your point, I fully agree. And it's what if this thing for the first time is our first game of chess, let's say, as an example, where we're upgrading to where there is no more banker, there is no more seat to fill. And I think the implications of that, like you're saying, are very profound. So anyway, I fully agree with that. So, yeah.
It's a big concept, and it's nothing to do with money. But ironically, it will lead to, I think, a really prosperous, productive humanity that will take us to a very different place to where we are now. So this is what, to go full circle on being really pessimistic and then coming back to optimism, this is what gives me, some of the hope that I have for the future and for humanity in general.
Mm-hmm. Mm-hmm. So one of the things I've talked a lot about recently in my videos, my threads and articles and everything like that is this idea about how if we look backwards in time, there are clear windows, like technological windows, where if you were within that window, you could picture into the future or past what life would be like. So for like us today, we can imagine what life was like for our parents and perhaps even our grandparents, depending on their age. We can look back in time to a certain degree, but after a certain point, things get fuzzy enough to where things no longer make sense. Like for me, sitting here talking to you in Australia over this computer, it's like I can imagine the world 10 years ago because I was living in it. I can imagine the world 20 years ago, 30 years ago, even 50, 60, 70 years ago perhaps. But once we get to the point where there aren't airplanes, there aren't cars, and everyone's using horses, it's like if you were to put me in a time machine and transport me back to there, it'd be like learning from square one. It would be completely incompatible to my current worldview. And so one of my thought experiments has been, if these windows over time have been getting shorter and shorter and shorter as the rate of change is increased, I wonder, does it make any sense to try to price Bitcoin in any terms? Because it's like asking a Roman, like how do you describe a Boeing 747 to a Roman and ask them to price that? It's like, what, they're going to price it in terms of chariots, or they're going to price it in terms of olive oil? I mean, it's like almost nonsensical. And so, people ask me, what's Bitcoin's price going to do? And, I think go up. But beyond that, I wonder, is even 10 million, 100 million, a billion too pessimistic? And is the correct answer that it's simply indescribable? Because in just a mere 20 years, 30 years or whatever, we'll be outside our current window. And the things at which we'll be pricing it in are inherently beyond our current comprehension. And so it becomes more valuable than any of us could possibly perceive. So anyway, that's more of a mental framework in setting up for the question of, you describe it as a triple point asset, you describe it as triple entry letter, you described it as many things, and tipping into that, I wonder, how would you try to explain the value of this to somebody that's just entering this from the very beginning? Forget price predictions. What do you think the real value of this is to humanity? And then from that first principles analysis of what is the value of this thing, then maybe we could talk about price later. But I'm just from that perspective of trying to picture future technology in today's terms, how would you try to articulate that?
I might just make light of what we talked about previously and say that, that toilet paper shortage that happened in Australia and people were fighting over it?
Yeah.
What happens when people realise that Bitcoin is a hell of a lot scarcer than the toilet paper? This is what I can't wait for to see happen when there is a social awareness ranging far broader than just, the small amount of people who are Bitcoiners now, where society as a whole actually realizes, holy dooly, this really is absolute digital scarcity. And to your point earlier, where we are now, I agree with you. I don't think we're going to have really the numbers or any valuation metric that we put forward today is going to hold any value whatsoever for a future point in time. And this is where, to your point, and I think Jeff Booth talks about this a lot, is that you can't value a future system from within a system. It's like saying, what is orange plus wardrobe? What does that equal? It's like, it's incongruent. There's no way to value what the future will be from within our paradigm that we've got now. And this is where, say, with that thought of a triple point asset, I believe that Bitcoin is the first triple point asset. This is my way of looking at the current system and trying to move our attention and awareness from where we are now to where we could be. And I understand the limitations of trying to value the future system from within the system, but it's my best shot at doing it. And so just very briefly, what I call Bitcoin is the first triple point asset. And what this is for the first time in history, we have got a number of tech innovations within Bitcoin that lead Bitcoin to being the best store of value, the best mean of exchange, and the best unit of account, all at the one time. And this is going to be, or have huge consequences from a valuation perspective, because it's basically Bitcoin will dislodge gold as the main store of value. It'll dislodge USD as the mean of exchange, and it dislodges our ledger system or unit of account as our unit of account. And so if you look at those three, functions of money, you've got 10 trillion in gold, 100 trillion in USD, and 2,000 trillion in the double entry ledger system. Now, use whatever numbers you want to use. I just use this as a thought experiment to provoke thought around this and thinking about Bitcoin differently, is that we've thought about this historically in a linear fashion, in that people think that, oh, okay, well, there's $2,000 trillion of value in the world. If Bitcoin, harnesses all of it, then Bitcoin can be $100 million a coin. There's 2.1 quadrillion divided by 21 million and we get to 100 million. Now,
and if I could add something to that, I agree with everything you just said, but one caveat would be, if it actually absorbed that, it'd be way more than 100 million. It'd probably be more like 100 billion or 100 trillion. But yeah, for a thought experiment, we'll assume a conservative, 1/10,000th of what it could be 100 million. But even in linear thinking, but you're thinking exponential thinking. So sorry to interject that, but I just had to.
Yeah. And you're right, because the point you make there is that, that's a very simple construct of thinking about it, but really price is determined at the margin. So price is determined by how much is available at the point in time. And
toilet paper.
people pay a lot when there's none. So what the funny thing about this is that a lot of people, I think, don't comprehend is that because price is upstream of market cap, people don't realize that Bitcoin can hold $1 million trillion worth of value, not just $2,000 trillion worth of value. It can hold whatever we want it to hold. And this is the brain explosion most people can't comprehend, because they think, oh no, but the market cap's 2,000 trillion, so there can't be any more. It's like, no, you fail to understand that in this system, when Bitcoin is the best at all those three functions, you can have as much money in there as you want, and you're still going to have $2,000 trillion worth of value here. But you just might have another $1 million trillion worth of value stored in Bitcoin, because people can actually store their money there for the first time in history. And this is where most people think that market cap is upstream of price, but they don't understand that price dictates market cap, and it's downstream of that. And so that's probably a really, probably the thing that most people get caught up in when they think, oh, there's no way that can happen. It's like, no, think about this logically. And this is one of the thought experiments I think about quite often, is that what happens when all the Bitcoin there is at the moment is basically stored in cold storage, or it's basically time locked, or take your pick on whatever you want to, basically say it's not available for trade. And the only, Bitcoin we have available for trade on a daily basis is whatever's minted on the day. That's not too outrageous for me to think that, if you look at the numbers, and this is, I'll give you the formula and then we can work on the numbers, but if we think that there's 6.3 trillion of global trade, and today there's 900 Bitcoin minted, by those numbers and by the formula, you divide total global trade by the number of Bitcoins minted, you get to a $7 billion valuation. And that doesn't sound outrageous to me, but most people look at me and think it's completely absurd. And I sometimes pull it out just shits and giggles, but I like to remind people that, what if I'm directionally correct and you don't buy Bitcoin? You get to think I'm an idiot for the next 5 or 10 years or 20 years, but then when it actually hits that number, we both get to know that they're an idiot for the rest of their life. So it's kind of like just having an insurance policy. You should buy some just for the fact that you've heard this crazy number, and this person could be stupid, but the rationale and reasoning is there. So debate the rationale and the methodology, not the number that you come up with.
Yeah, Peter, that's what I'm saying. It's so terrifying. It's like, it makes sense.
Yeah.
It makes sense. If we take, this, the total amount, into Bitcoin, it's $7 billion. It's like, it sounds completely reasonable until you say that number, and then it's just, it's this. They often say that humor is like the juxtaposition of two contradictory ideas. It's like the same thing. It's like, you sound so reasonable until you say the number, and then you sound like you've just taken a whole array of drugs or something. And the absurd thing is that's today's halving. That's 900, right?
Yeah,
that's not next halving. That's not
14 billion. That's the.
I know. That's now 14 billion a couple years from now, then 28, and then 50, 50s, and then 100 billion, and then it's mind-boggling. And that's before inflation. Let's say 5 halvings out, then it's 100 to 200 billion or whatever. And let's say the number of political currency units has 10x'd over the course of the next 20 years. It's like, then we're talking trillions, and it's completely mind-blowing, Peter. And the terrifying thing is, I think you're right, because I look at exponential numbers in other places, and it's exactly what's happened. It's like, again, with the Roman versus 747 metaphor, it's like it's incomprehensible to them from a technological standpoint, and then from a liability debt standpoint, it's like, take a look at the U.S. Again, looking at the the safest government. The national debt of the United States has gone up by something like 345 to 350,000x since the Civil War. It's like, and point being, if we continue that, the U.S. national debt should be not in the quadrillions, but in the quintillions by the end of the century. And so I guess my rambling there is that you asked me to find the flaw in your logic, and the terrifying thing is I can't. And I know that I am not smart enough to know 100% in the future what's going to happen. But my thought experiment that enters my mind is, what if there's a 1% chance Peter's right here? What's 1% of 7 billion? 70 million? It's like, okay, if Bitcoin has a 1% chance of being exactly what you described and your thesis being correct, it should be $70 million in today's purchasing power, in today's dollars. And it's like, I just don't understand how people can justify an allocation to bonds where, like you said, they could go down 40, 50, 70% over the course of 18 months. And yeah, Bitcoin could do the same thing, go down 40, 50, 70% or so. But with bonds, you literally have no upside. And with Bitcoin, it's like...
Literally, write your own. And this is why I'm more focused on sharing the methodology than the number, because I want the methodology critiqued, and I want the attack on the rationale and the logic that gets us to there. The number is downstream of what the logic and the rationale states, and the really crazy thing is that valuation of 7 billion is just basically conservative relative to triple point asset, in that's different again. That's really like numbers that I don't even know how to describe those numbers literally. And this is where, to your point earlier, and thinking about this on a serious note, is that there really is no way to value what's coming down the road in the new system with the system that we're confined in. And to you and to Jeff, I try and construct it because I've got a background in finance, and these are the tools that I've been equipped with. But to the likes of you and Jeff and Knut, I think you see the bigger picture, and that is the better way of basically describing it, that there is a completely new system, and what we know now just doesn't have any bearing on what the future looks like. But I can tell you, you will be extremely wealthy if you've got Bitcoin.
So I love to dive a little bit more into the methodology, because the point that I'm making here is just how nonsensical the two things seem. So I think in recognition of that, we have to dive back into, as you're saying, the methodology. So could you break that down again for people that are perhaps trying to understand it? Because I've heard you explain triple point asset for hours, but most people haven't had the luxury of hearing that. We've talked about medium of exchange, store of value, and unit of account. So most people are familiar with those terms, but don't really know what they mean. And more importantly, could you describe why this is the first time all three have been together in a triple entry immutable ledger? Could you explain that methodology, simply put, for people that don't have that background in finance or accounting, that they might want to hear spelled out again in 5th grade terms?
Explain it like I'm 5. Sure. I'm very good at that. And this is where I think, before we go into that, probably a really good foundation for thinking about, well, what happens from here is, there are 2 assumptions that I'm making. Firstly, that there is going to be only 21 million Bitcoin. And secondly, that blocks are going to keep being produced roughly every 10 minutes. I think those are fairly conservative assumptions for anyone who's done any amount of work in Bitcoin to think that those 2 things are going to continue. And they're the only real assumptions that I make in this model. Then we need to look at, well, what are the tech innovations that have been bestowed upon us with this innovation or invention, discovery, however you'd like to term this, for Bitcoin? And I put it down from a financial perspective into 4 key innovations. And those key innovations are absolute digital scarcity in the 21 million hard cap. That's the first. The second is seizure resistance. So we've got an asset that can no longer be seized. And thinking about this, we've got 12 words to store in our head that no one can take from us if we don't want them to. Or if, for whatever reason, touch wood, we are harmed and we don't give those words out, then no one can take those Bitcoins from us. They effectively get given to the network as a contribution, never to be resurfaced and repurposed. So an interesting shower thought I had on this is that with this seizure resistance, we're fortunate that the ancient Egyptians never had this, because if they did, those pyramids would probably never have been built, because part of the purpose of those pyramids was to effectively store their gold and wealth and take them through to the afterlife safely. They were effectively big vaults that no one could steal the wealth from. So if you could store 12 words in your head back in ancient Egypt, they'd probably just toss the pharaohs out in the desert, and who gives a shit about this big pyramid? So, I thought, anyway.
Fair
so
point.
That's the second one. The third point is censorship resistance, in that if you subscribe to the rules of the network, then no one can stop you from sending or receiving a transaction. And this is a really huge thing, because that's the first time in history that this has actually happened. There's always been a gatekeeper, someone who can put their thumb on the scale to stop a transaction in some way, shape or form. And the final one is sort of broken up into 4 points, but it's really around immutability, and that is immutable ledger, supply and issuance. So those three things that the immutability delivers really forms the foundation that we can't really comprehend right now, because we've never had these innovations here. We've never had an innovation that has a perfect record keeping for its entire history. This has never happened. And so for the first time in history, and this is like a funny thought to think about, you know, they say that history is written by the winners. Now history is going to be recorded by the blockchain. We're going to see exactly what happens into perpetuity. So all of a sudden, this totally redefines back to our discussion around trust and degradation of it and the rest of it. All of a sudden, there's no BSing this ledger. There's no, oh, hang on, whoopsie, there's a backsie, we're going to take that transaction back. It is on there for good. You know, your great grandkids are going to look back at your wallet history and go, they're going to judge you. Like, were you a good custodian of your Bitcoin when you received them? Did you understand and comprehend what was happening with Bitcoin? Did you preserve and look after them for time immemorial? Like, or were you basically fast and loose with it, trying to trade, you know, altcoins to get further into the Bitcoin world? And this is where all of a sudden, like, Ancestry.com is going to have nothing on, you know, the record keeping of the blockchain.
That's an amazing thought. I mean, when you think about it that way, it's like we just entered a third period of history where you had unwritten human history, then you had written human history, and now we like, as of 2009, theoretically, we've entered this. That's amazing. That for the first time we've entered recorded human history, that we have some form of the amount of recorded history that is immutable and hasn't been changing. Whereas before now, all of the written history is up for debate. That's incredible. So,
that's a fabulous take. I've never heard that. I'd love to see you explore that in time. That's amazing.
That's basically the implications of what you're saying. Is that what if this is the first human-made document that's like a living document that is unlike any other human-created document in human. I mean, it's mind-blowing. But this is the first time I've thought of it, but it's what you just said makes a whole lot of sense. That, you know, what if this is the third era? Anyway,
and
sorry.
I think I've never heard anyone describe it like that, so I look forward to your work on that in the future. But bring this back to, you know, the assets,
that's just one component. Yes,
money. We have and how they apply to the three functions of money. Store of value gets a considerable upgrade. So gold gets upgraded because, firstly, it's absolute digital scarcity. So you get all the benefits of being digital. You can move it instantly, anywhere, anytime. You also get the ability to have seizure resistance. So regardless if someone comes and holds a gun to you and says, hey, I want your Bitcoin, it's like, I don't have it. So, you know, you've got a plausible way of getting out of literally a physical threat for the first time in history. Because what used to happen is literally people would hold you up with a gun or a spear or a knife or whatever and just say, give me what you're holding. And it's like, okay, well, you take it. And they would basically take whatever they wanted. But for the first time in history, they don't or can't do that with Bitcoin. So that's a game changer. So it's an upgrade on, it's a better gold than gold. It's a super store of value. And then we look at the medium exchange. Well, what's great about a medium exchange? You know, the US dollar. I don't think it's being dislodged anytime soon. So I'm proponent for the US dollar hegemony happening, for a long time into the future. But this is a better medium exchange than the US dollar because we've got censorship resistance, meaning I can transfer that to anyone I wish whenever I want, which, a number of countries around the world who are suffering from sanctions would like to have. And this is a total game changer. And then when you overlay the immutable supply and issuance, on top of that censorship resistance, we have a much better mean of exchange than the US dollar. So all of a sudden we now have a super mean of exchange. And the final one is the unit of account. We've basically used single ledger systems for our early part in history, our first recorded history. Then, in the Western world, we basically found double entry ledger systems around the time just before Renaissance, and it's widely speculated that double entry ledger systems accounted for what led to the Renaissance. We basically had a boom in global trade and a flourishing of human society, and we haven't had an accounting upgrade for the last 500 odd years. And along comes Bitcoin. It's a triple entry ledger system. It's an immutable ledger that can't be changed. All of a sudden, this is a complete game changer from an accounting perspective. And now we have a super unit of account. And so where I'm with this is, for the first time in history, we have one asset is the primary function for each of those functions of money. So my belief is, and this is where the $7 billion valuation probably gets dwarfed and becomes meaningless when you think about a better way of thinking of this is going to be, there is now competitive tension between the three functions of money. You now have people with store of value competing with unit of account, competing with mean of exchange. This has never happened. So in my mind, I'm thinking probably a better way of thinking about the potential market cap of Bitcoin is not a linear accretion of value, which is where we're all at now, where it's, it could be 2.1 quadrillion because you add all those three together. It's actually more like, what if it's more like 10 trillion in gold multiplied by 100 trillion in mean of exchange in the US dollar, multiplied by the $2,000 trillion in unit of account? That literally leads to a number I can't literally describe to you. So to your end, it is a paradigm that we move to a completely new system. Yeah.
That's amazing. That's an amazing thought, and it's the beautiful thing about that to me is that, as absurd as that sounds to my brain, and as much as I want to reject that, at least right now it seems like a probable path. And perhaps it's not what unfolds, but I think the most optimistic path is, to some degree, more or less what you just described. That eventually we find a way to upgrade our accounting. We find a way to upgrade our storage mechanism that is somehow a combination of the analog world and the digital world. To me, it makes sense. Like, we have these problems in the world. We have trust breaking down, and eventually humanity needs to find a way to solve all these problems. And the most logical solution is one piece of innovation that solves all of them, or at least the vast majority of these various problems. And to me, that's the amazing thing about Nikola Tesla or Ford or Hayek or all these other people, is just that they understood eventually these problems will continue. Well, they understood that these problems will continue, and eventually we need to find a solution. And I can't imagine, if they were alive today, how much to be pounding the table on this. Because even if Bitcoin isn't the answer to those things, to me it seems abundantly clear that by far it's the most probable solution to these things, and that its existence in some way, shape, or form, to me, makes all other assets seem like a vote on pessimism to a certain extent. I mean, buying gold or buying bonds more or less seems to be a vote on pessimism, and that, betting, literally betting on this more dark and bleak worldview comes to pass. And perhaps it does. I'm an optimist, so I'm biased towards the Bitcoin route. But anyway, I suppose I'm just rambling on, saying that the wonderful thing is that I think there's a high probability you're right. And as absurdly optimistic as it sounds, like, to me it makes the most sense, because that's exactly what we've seen in iterations in history before. That the locomotive is one of my favorite examples, for one reason, because how do you price a locomotive in terms of horses? Like, the same idea there. But beyond that is that the locomotive, in a similar way to what you're describing here, seems to be multiple systems wrapped into one. It was a mass transit system. Before the locomotive, the idea of a mass transit system didn't exist. because the locomotive was the first. And then secondly, it was a new way of conducting warfare. The locomotive is what made warfare industrialized, more or less, because you can move large amounts of heavy machinery and infantry, so it was a form of self-defense mechanism. And then likewise the same thing with trade and everything else like that. And in the same way, I wonder, what if we're at that point, and like these technologies before, what if there's this one system at which a whole world is going to be built atop it that we can't even understand? Like, I can't imagine going back a mere 200 years and trying to explain to somebody that the locomotive works and how it's better than your horse. Oh, and by the way, along these rails, we're going to install these electric wires that will transfer energy. And oh, by the way, once we do that, then we'll create these computers that can transfer that electrical energy into computational energy. Oh, and by the way, we'll then make the internet. Oh, and then by the way, we'll make Bitcoin. It's like, I can't, like, I don't even know how to explain it to them. And that's the beautiful thing of where I think we are today, is that we're in this very unique period, at least it seems to me. I'd love to hear your thoughts on this, but we're in this very unique period where it exists and it still is convertible in the current system. Like, I think if we look back a few thousand years, okay, obviously Bitcoin's not existed for the vast majority of the last 3,000 years. And if we look forward in the future, I think it's probable that Bitcoin survives a significant period of the next 3,000 years. Perhaps it's only 300, perhaps it's all 3,000. But if I think of that looking in the future and that looking in the back, it's like, to me, it becomes obvious, it becomes self-evident that the window of time at which you can exchange anything of the old technological system, of the old accounting double entry system, and anything of the old store value system, of all these old systems that have existed, like the window of time at which you can exchange into the new thing without having to build something in the new system seems incredibly brief. It's like again, with the locomotive and the horse, it's like saying there's a very brief period of time in which you could trade horses that were mainly used as a means of transportation for, a train or for stock in a locomotive company. I think we're in that very narrow period in the same way here. And anyway, I'd love to hear your thoughts on that. Of like, how brief do you think this period's going to be? We're already 14 years into this period, and I think maybe we'll have 30 years, maybe 40 years. I don't know, but no matter which way you look at it, I think we're already halfway, if not over halfway, or almost to halfway, that we're in this very narrow period in human history. So I'd love to hear your thoughts on that, of like, how long do you think this takes?
It depends how well we educate the masses, I guess. That's the ultimate, that's the ultimate. And this year, I've got to say, I'm a huge fan of your work, and, the message that you deliver is because, you're exceptionally articulate, well-spoken, you deliver a fabulous message, and it's a message that is an irrefutable argument. And this is where, in discussing these valuation models, I'm not doing it to gain notoriety or to, hey, tell everyone that, hey, it's $7 billion today, you should buy some, and it's, I don't want the heat that comes with a valuation model that fails. What I want from this is a thought-provoking discussion around, tell me where the thinking's wrong on this, because I don't know if it's going to be 5 years, 10 years, or 100 years before this comes to fruition, but directionally I think that's the way we're going to go. And this is where, on a personal note, I think we've probably got to the year 2040 before we have full adoption on a global scale, before it comes irrefutable. And the rationale for that comes down to, I think we've got maybe 1% of the population is a Bitcoiner at best.
Yeah. Or half a percent, third of a percent, yeah.
Yeah. Okay. So let's go through this, and I've got a theory on this that I think we have to, and I might just say part of the reason for sharing this valuation model is twofold. Firstly, to tell people who are, looking at altcoins today, wanting to get rich quick, that we're effectively in the year 2009 and you can buy Bitcoin, because there's more upside in front of us than behind us, to a point that you make very well. So you don't need to take huge risk with altcoins and gamble and do degenerate trading to try and increase your Bitcoin stack. You just need to understand Bitcoin as best you can and as quickly as possible, so that you put as much of your money into it as quickly as possible that you feel comfortable with, and then sit and wait. So the future is coming. That's all you need to do. And this is where...
Could I add something to that? Just
Yeah.
really quickly. I agree. And one of my recent tweets that some people liked, and some people, I don't know if you saw it, but it was a very similar thought. We were joking earlier about how this theoretical 7 billion, 1% at 70 million, there's more orders of magnitude between now and 70 million versus when it was just pennies or dollars to today. And so, again, your model and the price, that may not be accurate, but the thinking goes, if this is what we think it is, even with a very small single digit or single percentage point of probability, I think you're right. And anyway, I just want to emphasize that. I think you're literally correct, that there could be more upside ahead than the last 14 years, which also is what makes logical sense. If this is the superior technology, the most upside inherently always has to be ahead with an exponential trend. So anyway, I just wanted to add that. But
I saw that tweet thread that you put out. It was outstanding. Yeah, I'm almost certain I retweeted it because it was excellent. It encapsulated that point far better than I can. So back to that thought about more in front than behind us, with say 0.5% adoption rate, I look at a conservative figure that Bitcoin's user base is doubling every 4 years, every cycle. So if we think about that, what the next halving cycle is going to get us from 0.5% to 1%, then 1 to 2, 2 to 4, 4 to 8, 8 to 16, 16 to 32, 32 to 64, and then we're probably, so that's 7 halving cycles. That's a 28-year period before more than 50% of the globe understands what an altcoin is. And I think that's the most pessimistic view I can take, because everyone needs to go through a Bitcoin cycle and do their own proof of work, understand the euphoria of, hey, I'm rich, and then the absolute despair of, oh, I'm poor, when it drops 80%. It's a great learning curve, and you get to compress that learning into a 4-year period as opposed to a 15-year period or an 8-year period in typical finance. So all of a sudden what this is doing on a subconscious level and a societal level is, we're effectively learning these cycles in a much more compressed way. So we are iterating our learning on how markets work effectively at double the speed or even triple the speed of traditional markets. So I'm hoping that 28-year, full adoption to what we've talked about is the most pessimistic of views.
Yeah, I think you're probably right. And I think, I wonder, we can currently overlay Bitcoin's number of users with the internet, and it's already faster than the internet was. But I wonder, what if we're talking about how it's multiple solutions to multiple problems wrapped into one, and that can mean its value is greater, multiplied together, exponential thinking versus linear thinking. And I wonder with adoption if it's going to be a similar way, that with other technologies we've had one linear, I know it's not linear, but we've had one curve. I wonder if the exponential value of this being multiple solutions also means that the adoption is exponentially faster than former technologies. I wonder if that's the case, and I don't have a hard view there, but I agree. I think 28, 30 years, that'd be 2050 or sooner. I think that's quite the thought experiment. Yeah.
I hope so, and I think if I look at what drives humans to action, it fundamentally comes down to one of two things: greed or fear. And this plays into our number one driver, greed or fear. You're either greedy, you want more, or you feel that you're going to miss out. And this is where, if we do a great job of educating people what this is, that there's inherently less risk than people believe there is initially once you go down that rabbit hole. And there is significantly more upside than what they could possibly believe. My hope is to move the over the window from millions to billions is an acceptable valuation of Bitcoin, and to help deliver an understanding that there is significantly less risk as well. So from an asymmetrical investment perspective, there is nothing on earth that comes close to it. And this is where I spend a lot of my time with my clients talking about Bitcoin, to the point where they literally tell me, can you just stop talking about Bitcoin? Because they've got other assets that we look after too. And it's like, I completely understand, but my thinking with this is that the more they understand, or the more they know, the more they will buy, and the safer they will be from the potential, fallback of our existing system.
Yeah, yeah. So as we come to a close here, I love your points that you keep bringing about fear and greed. If you could put everything we've talked about, we were very pessimistic at the beginning, or what others would call pessimistic, and then optimistic towards the middle and end here. If you had to, if you had to articulate the entire Bitcoin thesis in perhaps one or two pessimistic sentences or one or two optimistic sentences, what do you think would be the most efficient ways of communicating that to people that are maybe still on the fence or maybe don't have that push to learn more?
There are so many different ways you can think of it. That's such a tough question because you really need to understand who you're talking to, I think.
Yeah,
And that's why I
that's
really
a good
like to
point.
know, I like to know who I'm talking to. Am I talking to a, a very sophisticated investor who has very strong opinions about why it's not? Then, you might be
Yeah,
confrontational with them and tell them that, you might give them an absurd valuation that, hey, this thing will be 10 million bucks a coin in 7 or 8 years and you don't have any of it, and I'm really happy you don't. And, that's confrontational, and that will get their ego, either curious or competitive to make sure they get some. And personally, that's not my style. I don't like telling people that because it's confrontational. I think you get more flies with honey than vinegar. And I just think you need to meet people where they are. So are they struggling with the concepts that we talked about? It's important to discuss that first to sort of lay down that, maybe things aren't as pretty or rosy in, Kansas as we think they are. Or alternatively, there's a potential paradigm shift and, not instill a sense of fear because that's such a pessimistic view of looking at it, but a sense of realism as to what are some of the significant problems that we're facing. Once there's an understanding of that all of a sudden there's it tilts their way of thinking about what they've currently got, and it probably makes them a little more open to the potential upside of it. So some people really focus on greed, some people focus on fear, some people focus on being right and having their worldview. Some people are competitive, and and this is where sort of that meme, all roads lead to Bitcoin. There are so many avenues to influence people with this, but it really is you need to have an understanding of who your market is or who you're targeting. So I'm sorry I don't have a great answer for that one, but
I think that's the perfect answer. I think it's a really good answer. Yeah,
thank you.
it depends. It depends on the person. We all have different experiences and different personalities, and ultimately, Bitcoin is an answer to multiple problems. And so it's just a matter of which problem is the one that impacts that individual the most, or impacts that individual in the most present. Perhaps you're dealing with a toilet paper shortage, and you have to explain why Bitcoin solves that problem because it does, at least theoretically. So
Yeah.
I guess my last question for you is, how do you think we're wrong? Because there are so many arguments online that are just laughable to me, and I feel starved for arguments that are sound and arguments that are based in reality. And so I'm curious if there's one way, whether it is Bitcoin in general or your thesis specifically, what do you think is the most probable way in which we are completely wrong about this whole thesis? If you had to pick one or two possibilities at which Bitcoin could fail, what do you think they'd be?
I love this question because this is something I ask myself every day, and it's something that I spend a huge amount of time thinking about because I often sit there and question my sanity on this. What have I actually missed on this? And so I think about this, and this is where I really love presenting these thoughts and being able to discuss this with you because you want a reality check, and this is where, say, the arguments you get online, the arguments you get from people who have looked at this problem for maybe an hour, is so pedestrian, and I am craving, like absolutely craving, someone who has put work, time, and energy into this to give me something that is going to give me pause for thought as to why this doesn't work. And on a personal level, there's really only one way I think this does not succeed, and that is a fundamental software failure. And even then, I don't think that can cause a problem with this network long term, as long as the proof of work and the rest of it is intact. But I think the software developers, the Bitcoin core devs have got so much tied up in this from a financial perspective, but also from a social perspective. There's a huge amount of social clout that comes with being a Bitcoin core developer that, they will not get if, Bitcoin discontinues working. Like if it doesn't work, then, all of a sudden they've lost their social clout. So one of my previous concerns might have been around the fact that there could be a bug in the code, or the code could be undermined and someone gets corrupted to put this into the code, and it effectively leads to a total breakdown of that code. But because of its decentralized and distributed nature, the ledger can be rebuilt immediately, and not everyone runs the upgraded code. So there are so many fail-safes built into this system that, and from a social perspective, I don't think core developers, because a lot of their social clout comes from being in this community, it's going to be very difficult for a government or another institution or organisation to undermine that software. So I've kind of answered the question, but talked you out of a concern that I've wrestled with for a long time. So I really see, but if you find a legitimate argument, please let me be the first to be told. I'm searching for it. So
I'm the same way, and that's one of the reasons why I got on Twitter in the first place, was to find more differences in opinion, because it, as you put it, pedestrian. It's so frustrating when people make arguments against it that are just factually wrong. And one of my reasons I appreciate you is because I've talked to bankers, financial advisors, hedge fund managers, and other professionals off camera almost entirely, and so many of them just have one of the classic half dozen remarks or whatever that are just so factually incorrect or misleading, and it's very frustrating. And so it's refreshing to have new ideas like this. And for the record, I actually agree with you. I think of all the concerns, that's my largest. I mean, obviously, if the global power grid went out, that could be a larger concern, but at that point, we have many more larger concerns. And the probability of Bitcoin coming back would be the greatest of all the things that would go down in that scenario. But yeah, a bug in the code seems to be the largest concern I can think of. I mean, and particularly a bug in the code that breaks down some of the self-preserving incentives that keep Bitcoin alive. I think that's probably the largest threat. But it's like, okay, it's been over a dozen years now. There's a huge economic incentive for people to have exploited that code by now. And because it's open source, anyone can exploit that. So am I willing to bet that a couple people could coordinate to do that? Yeah, sure, maybe. But I think the irony is that the cooperative action to suppress and hide a bug in the code and not have one member exploit that for their own benefit, I think requires a level of trust unlike anything else we've seen yet in history, and perhaps even greater than the amount of trust that's currently on the Bitcoin network itself. So anyway, I agree with you. I think that's probably the largest concern, but to me it seems like such a grossly low probability, and simultaneously, if it were to happen, as you said, like, okay, so what? It just restarts back immediately or diverts immediately. And so anyway, likewise, if you find any way which you think your thesis is wrong, you don't believe it anymore, or you think that I'm wrong, or I don't know, I'd love to hear it, because that's what's a little exciting and terrifying, is that I don't know how we're wrong yet. So maybe we'll figure it out, but until then,
there'll be some smart person listening to this that'll give us some great thoughts on why
I hope
things
so.
We haven't talked about. But like you, I'm searching for that pushback on not the valuation number. The number's irrelevant. It's just give me the wrong thing. Why am I thinking about this the wrong way? And that to me is part of the fun. And why it's been great talking to you, because you just look at things very differently. But it's been really eye-opening and a pleasure, reading your work and getting to chat to you. So thank you.
Well, thank you. I appreciate the compliments. Again, very, very nice of you. I'm humbled. So I appreciate your time. Any last words you'd like to say to people of encouragement, or any advice for young people, or any advice for people getting into Bitcoin initially, or any parting words?
Parting words on this, I would say be patient. I can tell you personally, it took me 5 years to buy my first Bitcoin, and it is a decision that I regret on a nearly daily basis. don't be too quick to dismiss it. Be humble. Do as much learning about this as you can. I think, going down that path, there'll be a whole host of other benefits other than, making an investment that you'll get to learn about yourself. You'll get to learn about the Bitcoin community, and there really are a wonderful group of people that are very helpful and quite engaging. So just be patient with it. Learn as much as you can, I think, is the biggest thing. And if anyone out there listening to this has any pushback, please find me on Twitter at Dunworth_Peter. I'd be the first to welcome any engaging debate on what I've missed. So thank you.